Welcome to the Payments Trilogue, where three seasoned professionals discuss payments and more for Europe and beyond.
Hello, my name is Michael Salmone, and I'd like to welcome you to another episode of the Payments Trilogue together with Javier and with Ralph. And today we want to look at the US market, which is something we haven't done before. Now, I don't know if anybody's noticed, but there's a bit of turmoil in the US at the moment. And that is actually also hitting the open banking sphere. There was an attempt to introduce more regulation, but Trump killed the CFPB. So that doesn't look like it's happening. The banks are starting to charge for API calls. So a few things are happening slightly differently. So it's wonderful to have Sarah here. So Sarah, maybe you could tell us a little bit about yourself, your company, and a few of the things I've sort of started to teaser.
Yeah, absolutely. Thank you so much for having me, guys. Really appreciate it. You'll find out in my little Sarah background introduction here, but I've spent a lot of time looking at and focusing on the European payment space. I wrote a few articles on PSD2, and I was very involved in making that switch from a technical perspective and guiding merchants through that transition when I was at Braintree. So still follow very much the global payments space, and it's just fascinating to see all the various implementations and how things have grown, pay by bank and elsewise. But my name is Sarah Stapp. I am Chief Commercial Officer at Aeropay. Aeropay is the fastest growing US pay by bank payment network in the country. We're also the only payment method pay-by-bank provider that has a full end-to-end suite that we built in-house. So we're pretty special. But myself, Sarah, I've been in payments about 15 years now. I started when I was 6. Don't do the math, please. And I actually fell into payments, as I think most people do. I applied for a job posting for a small little startup called Braintree. I was employee number 20 there. I didn't know anything about payments except, this little plastic card is how I pay for things. And that little box, I didn't even know it was a POS device at the time. I was like, that thing that I signed. So it was a cool startup in Chicago, and I thought it was fun. And I joined. And the first thing that when I joined in 2010, the Durbin Amendment was really big. So one of my first projects from the CEO was like, go listen to what that guy, Dick Durbin's talking about with this Durbin regulated interchange and take notes. I was like, okay. So just really caught the payments bug and was fascinated by however, all these things happen behind the scenes, and there's so many pieces and moving parts to actually moving money around the world. And just kept raising my hand whenever new projects came in. And we did a huge growth geo expansion initiative at Braintree over almost all of my tenure there. So about a decade of my time was spent launching new markets, 37 countries in the EEA region, Hong Kong, Singapore, Malaysia, New Zealand, Australia, Canada, Brazil. And we did the work for India, but it never actually launched. So very interested in all the ins and outs, completely launching these markets. What is pricing like? What's the competitive landscape? How do we actually onboard merchants? What are the regulatory rules? All of these things. So it was a very fascinating learning experience there. Then I consulted for a few years for merchants and payment companies. And I have now landed at Aeropay, where I get to talk to merchants every day about why US Pay by Bank is the next thing that they need to add to their checkout. I live in Chicago, if you're interested, and I have 2 dogs, 2 kids, 2 horses, and 1 husband.
Fantastic. Now we know everything about you, and a very impressive journey you've had. I mean, Braintree from the startup, and then all this global view. That's amazing. But maybe you could tell us a little bit more about the US market, because the rest of the world always looks to the US in open banking as being the market-driven one, the one that doesn't need so much regulation like we need in Europe. How is that going?
I think it's going quite well, actually. I feel like we're at this hockey stick moment. There's a lot of things that are coming together, in my view. We have we all know about MIF, right? Regulation, and there's regulated interchange in various different markets. We don't have that in the U.S. Banks really like their interchange here, and consumers really like their points and their miles and their cash back and things like that. We have whole influencers in our country that have YouTube channels and Instagram, just all about how they can stack their points and do all these things to, it's a whole thing. So interchange obviously is can be quite high, and merchants are looking for more cost-effective ways to process those payments, particularly when you're comparing it to debit, because if you're thinking about it from a merchant lens, it's like, well, it's coming from the same place, right? Like what, why can't I get more cost-effective way to do that with Pay by Bank? I think merchants are also looking at Pay by Bank as an interesting alternative from a risk perspective. So it's much more secure. It's much more strong, strongly authenticated transaction versus credit cards or even debit cards if you're comparing apples to apples there. And it can be a very smooth experience in the U.S., especially on mobile, e-commerce or on a mobile device. So most of those conversations are coming from, I want to save money. But then also I want to make sure it's, a good experience for my consumers. And I think consumers, we've got a lot of Gen Zs and millennials that are growing up and having more money to spend. And they're, some are leaning in very hard in the card space and doing those points and stacking and all that. But there's a lot that are saying, I don't want a credit card and I don't want to do that. But they still don't want to carry cash because cash, carrying money around sounds terrible. So there's all this happening, right? All of these planetary, things are happening, planetary alignment, but we don't have the regulation like we're seeing in other countries. The administration is just gone. But there are organizations and there are people and organizations like the FDX and the CFPB that have been trying to push for open banking frameworks and regulations. So what we don't have is regulation or a standard API for this actual open banking data itself. We have a menagerie of different ways and methodologies for bringing that information together. And we're still making it happen. So I'm very excited, more so on the framework side of bringing all of this data together, and so that the consumer is aware of, the consumer, they have their data protections, but also that standard way to get this open banking data that we then, companies like Aeropay are bringing that data in and using machine learning and AI. I had to say AI at least once if this is a payments podcast. It's a requirement to come in and use that very rich data to make better risk-based decisions on a transaction-by-transaction basis.
Could I ask you a question there? Because, from a European open banking perspective, I must say I'm actually looking at the US with quite some envy these days. Now, going back to 10 years or so, I guess we must admit that it was on the TPP side that regulation seemed to be a good thing, forcing banks to open up. And it looked like it would work in our favor, but it has fired back big time and it's getting worse. And we're just going through the review of PSD2 into PSD3. And what has been put on the table originally by the Commission would have been a way forward, so with lessons learned and making advancements, but with what the Parliament and the Council are proposing, it'll be a step backwards. So it's not looking overly promising at the moment. And whilst it has brought some level of standardization, but if those are wrong, if you're getting the wrong standards, or if you're getting limited, if you're limited on technology in particular, and that's one of our biggest problems when regulation goes into technology and tells you, yeah, but you should do it this way or that way. That is where we are now struggling, trying to make way or get things going based on, well, the technology we're given, and regulation being unable to really force any improvement, because of course it's also not their job to understand all these what's right and wrong about these APIs and etc. So I think that for the last 5 years or so, and you mentioned it already, so that there has been, I think, good growth in the US, and with things moving in the right direction, whilst in my mind, in Europe, we've gone the other way.
Yeah, I've seen, I've watched from across the pond what's been happening over there. And I think that was one of the first things when I was looking at PSD2. I actually read almost all of it. It was a very long time to read all that. Not the most exciting read. But in reviewing it, my first question was, how are the smaller banks going to be able to, adhere to this? What is this going to look like? Who's going to make it? So a lot of different questions. And I think what happened in the US is we have this innovation layer. We have these tech companies that have said, you know what, we're going to figure this out. So we've got a lot of the big banks that have the ability to provide these APIs that fintech companies can directly integrate to. And then there's companies out there that you may have heard of them, and actually Visa and MasterCard have invested in some of them, like the Jack Henrys and what's another one, Akoya, MX, and then you saw like MasterCard has Finicity and Visa has Tink, although they've now, I don't know if you saw the recent conversation, but they pulled out of the US. So there are these layers that have been put in to say, hey, we know you credit union, because we have a lot of banks in the US, and we have a lot of smaller credit unions and community banks and things like that. And they might not even have one developer. They might have to, pull in a consultant every time they want to make a change to their, back end or customer portal or something like that. So we've seen these bank aggregators, if you will, that have brought these OAuth type solutions to market. And I think that's really helped us as a U.S. payments, industry to drive that forward. So fintech innovation has really been the driver in response to market demand for this payment method.
I mean, there are companies like Plaid who have famously sort of done this integration without anybody telling them to do it and without regulation. So that's really a role model, which we're very envious of. But one thing maybe you can explain to Javier, because he represents the banks here, how to motivate the banks. Because in the US, they make so much money. I think it's 180 billion in credit card fees per year. They must surely hate open banking, even more than the European banks hate it. So can you explain to us how you managed to convince them?
Yeah, so I think, we're always going to be on opposite ends of the spectrum, right? From where I'm sitting, you see where interchange regulation is happening in other markets, and the world didn't collapse, right? In Europe, it's 20 and 30 bips. I think some U.S. banks, thinking about average interchange, their hair would catch on fire just thinking about that loss. But what I think is, banks ultimately care about their consumers, right? And I think that if they don't lean in and be there for their customers, they're going to go elsewhere. Now, I think Zelle is really interesting because it was its own, kind of standalone solution. Now it's very much more integrated into a lot of the bank's portals. Even I used to be able to use Zelle, the app, and now my bank has integrated Zelle, so I have to go into my bank app to do anything I want with Zelle. So what I think they just, in my opinion, go with the flow and think about the customers. And I think we're all doing what we think is best for our customers, merchants, and then our merchants, customers who are consumers. And at the end of the day, no matter how much people like it or hate the decision of consumer changes and adoptions, movements in that where the needle is pointing, the consumers drive everything, no matter how much we want them to do something different, right? And so you might as well, do you want to keep your consumers? You need to have the tools and the options that they're looking for. They're going to go elsewhere. So that's always my thought, is like, let's educate them. Let's let them understand what the benefits are and why they might want to use it, or they might want to go with a card. But then also we can just come up with a new fee on cards, and we just come up with a new scheme fee and it'll be fine. Or a chargeback fee or something. But that's kind of where I'm sitting. But Javier, I would love to hear your thoughts on that from the banks.
Yeah. I do have a different understanding on how the process went in Europe, and where we are now is a consequence of the pressures put by TPPs and fintechs on the regulators. And I think somehow they got what they were asking for. And that was the response of the regulator, very much influenced by the fintechs. And the problem years ago was that it was understood there was a confrontation in between banks and fintechs and TPPs, and which shouldn't have been addressed in that way, because the regulator what forgot was the citizens, the consumers, the customers, and they have enacted regulation benefiting or trying to benefit one part of the industry against the other, instead of focusing on really the needs of the customers. You have been commenting quite rightly. So I think we are here, and we are in a situation in which we are far away from a market equilibrium point, I would say. And what we need in Europe is to come back to a market equilibrium point, to some kind of balance that we are missing. And we need probably to do some shortcuts, and maybe we can learn some lessons from the US on how to come back to a more market-led environment. And my question to you, Sarah, is, for instance, and you mentioned this conundrum of the API standardization. How do you tackle with that? And is there anything you can tell us so that we can also try to solve that issue in Europe?
So what I mentioned, it's a bit of a hodgepodge at the moment, but we have an organization called FDX, and they are writing a standardized framework that will, I think, help that a little bit, more than a little bit, a lot of it, will help quite a bit. But I feel like we're already 60 to 70% of the way there. It's working. I think adding the standard framework and protocol will just make it easier for us to work together and to talk together. I think there's a lot of players and there's a lot of stops on the train of any transaction that's happening. And y'all know from the card side, I mean, transaction, messaging cleanliness or lack thereof can really affect things like acceptance rate and authorization rates, and that data being then pulled into if there's a dispute or something at the end of the road. So getting that bare minimum data elements that we want to send and having standardized messaging, I think, is only going to elevate that. But we are in a point where it's nobody else, typical Americans, Wild West, we're like, well, no one else is going to do it, so I guess I'm going to, just jump on in and figure it out. And that's kind of what's happened. And a lot of smart, thankfully, the smart brains have put together what's working quite well today. I think what we're seeing in some of the news articles as of late from JP Morgan Chase and Plaid, renewing their data access contracts and things like that, is just evidence that we are moving in this direction where it's getting enough attention that the big boys and girls are saying, "Ooh, we need to think about this." That's what I'm most excited about, and I will definitely be following along very closely. Is Pay by Bank was a bit under the radar, especially for the banks. I think they were like, yeah, it's happening, but whatever. It's not big. It's not a big enough deal for me to think about. Now it is. And we at Aeropay, we've always paid for open banking data. We don't screen scrape or do any of that. So we're just kind of looking around. We're like, oh, okay, so same old. That's great. But what I really do like about FDX in particular, just coming back to that screen scraping and different methods for bringing that data in, true open banking data, as y'all know, is that API driven, like you were mentioning, Ralph. It's not screen scraping. It's not, penny drops and, those kinds of things. It's going to make things faster. It's going to allow for more innovation. It's going to allow it's the data richness that you don't get outside of API driven data that you get from open banking is really what I'm the most excited about.
Yeah, but talking about motivating the banks, so we've so far we've tried three ways. Initially, by what you've done in the US now for many more years, which is essentially using the interfaces which are there, which are user interfaces. Some would then lead to screen scraping, others would be API interfaces. So that would be could also be API based. All the corporate interfaces are APIs typically, but that was sort of stopped by the regulation, in my mind, far too early, before there was actually any relevance. And then we tried to motivate the banks by regulation, so forcing them. But as we know, I think the real question is, how do we get good APIs? Everyone wants good, so on our side want good APIs, but how do we get them? So we've tried with force compliance, but then the way this was imposed didn't lead to good APIs. It led to absolutely minimal APIs, and basically, or as bad as they could get away with, essentially. And then we've tried now for a few years on a collaborative way. We call it the SEPA Payment Account Access Scheme, SPA, where we trying to get to actually paying for it, for good APIs. But that is also not working, at least not yet. And because the interest on the bank side is really not that commercial, really, especially not as the whole thing is sort of very small compared with all the much bigger fish they can fry and have to fry elsewhere. So therefore, paying for API access isn't the thing either here, which is why I think the really only way that works these days, and for me, this is exactly why it has been successful in the US, is that the TPPs have accessed the banks through whatever was there, be it web or mobile, be it scraping or be it API access, but whatever, and then bring it up to a point where it becomes relevant, so maybe becoming a pain point. And of course, from a bank's perspective, the use of the automated use of a user interface is not what they want. And if and when that becomes a real nuisance, but only then, they would think about, okay, well, how can we make this better for ourselves? So the bank side, so the bank wanting to make it better. They want to basically lure the TPP away from a user interface into using a backend API. But of course, that would only work if that API was really as good or better than what the TPP was using otherwise. For me, that is the secret. But unfortunately, we're stuffed here at the moment, somewhere in the middle between those three options, and we're leaning more towards regulation and paying, and neither of them works.
And how have actual payouts been for y'all in Europe? Because I think the reason I ask is one of the areas where I've seen very interesting pockets of alignment with everybody is actually in payouts. So for those on the podcast that don't know, we have two instant payment rails. We are years behind Europe in that regard, but we do now have two different networks, FedNow and RTP, through the clearinghouse, where we're actually able to do 24/7 real-time payouts. And then there's RFP that is soon coming, which would be instant deposits or pull transactions. So we have seen consumer loves getting instant payments because that's a new novel thing for US consumers. The banks and everybody is able to charge more for it, and merchants, can usually at least cover their costs for it, because consumers don't care to pay. I don't know, we have Venmo, we have Zelle, we have, PayPal and all of those. And if you go through the customer experience when you're trying to transfer or withdraw money, they say, oh, we'll send it to you via standard, which is 3 and 4 days, or you can pay a nominal fee of $2 and you can get it instantly within 5 to 10 minutes. And most people are like, sure, like that's like a third of a Starbucks, here. So they don't care to make that payment. But everybody has really liked that win. So I think to your point, Ralph, you've got the banks feel like they're getting their bang for the buck. The consumers are excited and the merchants are excited. So I think we have to find that middle ground where everybody feels like they're getting their fair shake, and that nobody's losing out and that the customer wins. But I don't know, you guys have had instant like P2P and you've been able to do that for so long. That's probably old news and not exciting for Europeans anymore, right?
Yeah,
Well,
but
it's
I think
Xavier's
that,
old outfit who organized that. Yeah.
yeah, I think that also somehow firebacks, because for instance, because we are so proud of the instant payments, now in Europe we are imposing it everywhere. So and that has become the priority for the regulator. The regulator has decided that that's the top priority, regardless the citizens' wishes. And beyond that, it's not only the instant payments. We are also imposing the verification of payee, which it's also something functional and valuable for the consumer. But then that has become the second priority. So the problem is that open banking is not there. It's not first priority. It's not second priority. It comes like seventh or eighth priority. I wouldn't say that now banks are against open banking. The only thing banks require is that there is open everything for everybody. So equal and level playing field for everybody. But beyond that, they are not imposing. But necessarily, if there are other priorities on top of that, they will have to serve those other priorities which have been set by the regulator. And that somehow crowds out the possibilities and the options for many other initiatives, which may be even more valuable for the public and for the consumers, rather than maybe BOP or having instant payments for everything, which may not be the need for tomorrow, but for a longer term future. But that's my view. And I think we are very much in a paternalistic way directed towards something which maybe is not well aligned with the needs of the market, really. And that's where we are standing up right now. In that situation in which we are led, we cannot decide by ourselves which are the projects, the innovation that really the market needs to be implemented, but we are driven by what comes from the regulation.
Yeah, well, there is a little bit of movement there, especially on account-to-account payments in Europe, especially in relation to regaining sovereignty for European payments, independence, and of course that is hard to achieve in the card world. So therefore, account-to-account and instant payments is the obvious route to go, which is exactly what we're doing, and the banks are doing that too, well, driven by regulation. And but now I think increasingly also maybe by desire. So we have big bank-to-bank initiatives, and actually many of them started as national instant payment solutions, and they always started as a peer-to-peer, person-to-person thing, like Swish and Mips and Twist and Twink and because that was the way to gain a critical mass before you can actually turn that into an e-commerce or into a retail payments solution. You have to have either a critical mass, either on the merchant side or on the consumer side, because if you have neither, then you are in that chicken and egg situation where you can't get off the ground. So this is coming, and as you may know, we also have now the ECB coming in from the sideline there with their own e-payments solution, and so which is all sort of account-to-account movement. So we have a growing space there, but from my perspective, unfortunately, not so much on the on the open banking side of it, which is a shame because that is what we have just implemented. We spent so many years. Every payment account in Europe is accessible. It's the one and only electronic payment system that that gives us actually sovereignty today. Because if anything goes wrong with other existing electronic ones, there is only one left to reach every person in Europe. And that is open banking or cash, but the electronic version would be OB. And but there's one thing I wanted to. Well, we have to come back. You mentioned it already, the commercials there, and I think J.P. Morgan coming out with a big requirement there on getting paid for all that data access and data exchange. What's your view on that?
I think it's just par for the course. I think it's just an evolution of where we're at. The big banks are going to, all the banks, right? They're going to look for a way to, whether it's card, whether it's pay by bank, whether it's, a loan, whether it's this, like they're taking their little nickels and dimes or maybe a little more, with each of these things. And I think they see what's happening and going in that direction to say, under the guise of, we want to help foster innovation, which I think they do. I think Chase is a great, in the US, they drive a lot of payments and banking innovation because of their size, and they can do those things. But this is my surprise face. Whenever that announcement came, like, oh, look, we're charging fees now for this kind of thing, but fees were happening, with a lot of these bank aggregators already today. So it's not a huge change for us. I think it's just a directional, okay, this is the shift. This is the direction that we're going here. And just going to be watching other banks, may follow suit. We'll find some kind of equilibrium here at some point, but at Aeropay, we've always wanted the best data, the most and best data that we can get, and we were willing to pay for it. And other companies that are providing a pay by bank network, solution, also have been doing that as well, because there is a lot of value. And I think this is something that people may not think about on the surface when you're talking about pure cost. But where I'm at Aeropay, that extra data allows me to send more bad transactions away, and accept more good transactions, and protecting our merchants, protecting our consumers, protecting everybody. We're making the decision to approve or reject that transaction. We don't have issuing banks in an account to account world they have their algorithm and they have all this, information about their consumers. We are relying on open banking data to make good decisions. So it's part of the cost of doing business as to how we see it at Aeropay. I think a lot of other people that are in this fintech realm are seeing it. But it is a shift from 10 years ago where you weren't having to pay for screen scraping and penny drops were not that big of a deal. But that was before AI. I mean, not obviously AI was around, but not how we have it today, right? And a lot of this information being passed more easily. So I think it's just an evolution of where we're at. That's just my opinion.
Can we dig a little bit into that? Our time is almost over, but you did mention AI, right? I mean, the US is famously pushing that topic, and it looks to some that all this clever stuff that we've built over the years with APIs and fintechs and TPP and open banking is being bypassed now with AI, because it will just sort of log on and do its magic without adhering to any regulations, to any standards. Do you see it that way, or how do you see AI? Is it a threat or a help to open banking? How would the two compare?
I think it's such a double-edged sword. AI, although, my grandma was like, is this going to be Skynet? Is this like Terminator? Are we going to, like, robots going to be in our brains? It's like, no, they're not that smart yet. From a payments application, I'm very excited about what we can do internally, but you have to really consider, there's a lot of things you have to consider. And I don't think everybody has thought these things through, because everything is just evolving so rapidly. When we're able to contain an AI machine learning, model in a company like Aeropay or Visa or whomever, it's closed, it's contained, it's controlled. Whereas you're looking at some of these chat GBTs and these big open learning models, they don't have guardrails necessarily in place as they should. And so the area where I'm looking at is more of that agentic AI, where the AIs are making decisions autonomously with guidance from people. It's like that to me is very exciting and cool as a consumer, but it also thinking about the other side of the coin. It's like, oh God, that my AI booked a flight to Milan that costs like $20,000 and it's non-refundable. Like that's not what I wanted. I said I wanted a beach vacation. Let's talk about Florida for like $500. So I think there's that, but I think similarly to crypto, not exactly the same, but I think there's what are the ramifications, and I don't think we know yet, and that's the thing that's just a little scary for me as an individual. And I would love to, that's one area where how do we put in guardrails so that we know it's AI? How do we, if AI is involved in some way, that's just knowing, I think that's the biggest scare for me is like, how, is this AI or is this a person? Like, I don't even trust pictures and emails and stuff anymore. So,
yeah, I think those guardrails, that's exactly the thing. And so we got to look at how to secure this. But if you ask me, agentic AI, or especially the agentic commerce that Visa, Mastercard, PayPal, all of them, that is screen scraping 2.0 or 3.0 even, really. So it's just a nicer name for it. And so it's not about that's scraping or not, because the internet is all about scraping. The question is how to secure it. So how to put the guardrails, how to make sure that credentials are being used in a secure way. Shared or not, but secured. It's about security. It's not about technology. It's about security. So how can we add the required security, and preferably without telling which technology to use or not to use, because it's about securing the technology, not to forbid it. That's, I think, one of the things we have to learn here in Europe.
It's not the same, but I think PCI is, is similar. It's like, hey, you should not be writing down full credit card, like full pans on a sticky note and have it at your desk, right? You shouldn't be doing these, like creating those best practices and having, checks and balances to ensure that these companies are doing those kinds of things so you don't have breaches, data breaches and things and the like.
Yeah. Very good. I think our time is up, unless there are any last-minute emergency comments to make. I think I would like to thank you, Sarah, in the name of Ralph, Javier, and myself, and all the people watching, because you've been completely fascinating. Been really good to see how your part of the world works. So thank you very much for sharing that, and look forward to seeing everybody watching at the next episode. Thank you.
Thank you so much for having me, guys. It was so fun.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.